Tuesday, the 19th of January, 2023, believe it or not. I can't see that. There we go. Oh, that's not what's supposed to be happening. Let me share the right screen with you. That one. I think I'm sharing screen. Or am I sharing screen? Maybe not. I'll get hold of this one day. There we go. Nice to have you with us, of course, as always. Let's get stuck in, shall we? Why not? If you'd followed everything that we said on Monday, you'd probably have a great week, I would have thought. Have you executed the positions we spoke of in Aussie yen, silver, you would have been doing okay. In particular on Ash's part for Aussie yen. I'm in Aussie yen short, but haven't taken any profit yet. But Ash, super trade. Well, I assume he took it. Depends on if you're in front of the charts at the right time, eh? But I did have a downside, and it was Euro Aussie as the market switched overnight from, well, I don't know if it was risk on, but it's certainly gone risk off today or overnight. Hi, Paul P. And the Comdols absolutely having a shocker yesterday. The Aussie, the CAD, the Kiwi, and I don't know what happened, frankly. Well, I know there was news out of the States, and that probably drove it, but the market just completely gone, absolutely risk off, and that hammered my Euro Aussie trade. But Aussie yen, on the other hand, doing okay. Let's talk about gold, shall we? And had you been trading gold as a breakout for the week, you would have been doing okay as well. Monday's trade finished up down here. In fact, if you didn't move your stop loss, you'd still be in that trade. I don't recommend that's the case because don't forget we're taking profit at first resistance or support. Or I've decided after looking at this week's results, or 1-to-1. So to me, it's 1-to-1 or first substantial support or resistance. And that's been primarily the pivots for me this week. Not that I've traded it. Don't get me wrong. I haven't taken these trades other than Mondays. But had you taken Tuesdays, you would have got the 1-to-1, or actually you might have got the 1-to-1. You would only have got the support or resistance level, the pivots probably, or a trade line, horizontal level, whatever you use. Yesterday, happy days. Today, let's think about it. Our range bottom is here. Our range high is here. And we've got, at this point, a risk profile that says 120 odd pips. That's kind of been the case, I think, for most of the week. So this is getting very consistent in its shape, but I must say that the market has gone range rather than trend. So, you know, we're still experimenting with that, of course, or I'm still experimenting with that. So I don't know how this actually works in terms of, okay, if we're in a trend, how it's going to work, but certainly in the range, it looks to be okay. That's probably a positive, I would have thought, because a ranging market, if it breaks out, it's going to give you a better result, you would have thought. Never, ever assume is the key. So let's go with today, and we'll set a sell at, I think I'll just do this manually rather than as I tried to do with the trade manager or the whatever that other thing is called, trader's toolbox or cool toolkit or something. Doesn't work for me. It takes about an hour and a half to set the trade. Guess what? Too long. So we'll go in with 0.5 and we will have a pending order for the long. Level is 1912.94. Let's call that 1912. It's not a buy limit, it's a buy stop. Level 1912.95. Stop loss is going to be the low of that bar, 1900.93. Let's call that 1899, just because it makes sense to get it out of the 1900. To me, it makes sense. 1989, is that what I said? No, 1899. That makes sense. That's the stop loss. So that's the buy place. That's in. Note the stop loss is well below the low of the range, and that's because, as I said, it just makes sense for me to get it out of the way of the whole number. So the sell will be the reverse of that, except we'll go in. No, we won't. We'll go in at the same number. Again, because it makes sense to me. Sell stop. If I press that, no, I won't do that. Sell stop, again, at absolute minimal risk, because we don't know what's the actual way to execute this yet. Pending order, sell stop. $1,899 and stop loss 19, whatever it was, 191. Let's call it 1913. That kind of makes sense as well. Place sorted. All right. So we've got a long above here. Obvious to me that we take profit at DR1. We've got a short below here. Horizontal level. You'd expect if it goes short, it's going to go through that. We'll use DS1. So target will be DR1 and DS1. Also makes sense because that was yesterday's range, right? The distance anyway. All right. Thank you guys for joining today. Should we go somewhere else? Yes, we should. I'll update what tragedy I've struck yesterday with Euro Aussie. Euro Aussie, I was short underneath this bar here. The reason? Well, it was a false break. And I suppose that level there was significant, and that's why I was taking profit there, right? However, like I said, the market switcherooed overnight and went completely risk off. And anything that's got an Aussie in front of it or even behind it suffered, as did the CAD, as did the Kiwi. So the Comdols had a shocker, and I was victim to that. On one hand. On the other hand, Aussie yen is playing ball, and we are in that trade. And I'm sure Ash will have a smile all over his face. He did exactly what he asked it to do on Monday, and I hope he got into that trade and cashed in big time. The other trade that I had during the week was CAD Swiss, and as you can see, the direction I got was absolutely spot on opposite, because I was trading above this bar here. And that's just never even got triggered. And as I said, the Comdols yesterday just had a shocker, and the CAD was one of those. Interestingly, pulled up at the bottom of this big sell-off that we've had. So what happens today? Well, in my mind, I go straight to the dollar index. And as expected, and like I said, if you've done everything that we suggested and executed everything that we suggested on Monday, you should be having a pretty good week. The dollar index is probably one exception. And where's it gone? It's disappeared. Oh, no, that's the 500. But you can tell I can tell the story. Oh, there it is up the top here. Dollar index went and took out the lows and then rallied big time. That's yesterday. And of course, that was on the back of the news out of the US, which I'm sure Ash will fill us in on as to why the market reacted as it did very, very shortly. I'm still of the opinion that this will continue to rally, and I'm looking at this level up here. around about the 103, nearly 104 mark. So today I'm expecting that rally to continue, which should bring about reversals. Well, not so much reversals, because we've already seen it happen in things like gold, which hasn't suffered as much as predicted by Ash on Monday. Silver, of course, we're both in agreement with that. That was a good sell, and that has played out beautifully. Certainly yesterday, as I said, the market changed its sentiment. Nasdaq the same, S&P 500 the same, and interestingly, the FTSE has rallied today. Those other markets are not in operation so far, but the FTSE's rallied. Aussie 200 has had a good day despite yesterday's turnaround. So maybe that's a precursor into today, I don't know. But my thought process would be, and I want to hear a bit more from Ash as to why the market actually switcherooed, its sentiment. My thought process would be anything that's at support or resistance, and into that equation I throw things like, I can't remember now, but the Euros won too late now to play our edge, which of course is the daily pivot test. But there's a lot of assets that are at support or at resistance, and I think that's going to be the key for me today, is playing them off support or resistance. So let's go with that theory. This not so much good for me. New Zealand dollar CAD, that's the one I took last week and lost. Can I trade that short today? It's no, sadly, because I think at the end of the day I want to, but I want to know more about why the market switched sentiment overnight before I do such a thing. So I'm just hanging on to Aussie yen with the hope it can get through this support level and down to the trade line where I can get some money back. That would be good. As far as the thesis goes, that's it. If I've got a support level, I'll look for a higher low. If I've got a resistance level, I'll look for a lower high. And thereafter, cross my fingers and hope it's right. No, that's not the way to go. So let's bring in Ash and find out exactly what the heck happened in terms of market sentiment overnight, or why it happened. There's no doubt it happened, but why did it happen? Go, bud.
Hi, mate. Yeah, there was some pretty atrocious data from the United States, which is, as you say, it's pushed the market lower, and the sentiment so far has continued to the downside. It does give us a few trade, well, it gives me a few trade ideas. But let's go through the numbers first and discuss those, and then we will just see what we can do from here, because where we are at is, in a way, not in a position that is that simple, because the market has been in a very, very strong trend to the upside, and it is just one number ultimately, but it spooked the market sufficiently. So what we started to see here is the core PPI number and the PPI year on year and the core PPI month on month both came in weaker, and the core PPI came in weaker than expected. So that's disinflationary, which is actually something that the market has been after. And I think after seeing that number, we probably could have been justified in going long on the markets, particularly sort of like things like the Nasdaq. So it was quite strange, really, to see the ultimate result, because down here we see the PPI numbers as well, weaker than expected and weaker than previous. So we can see the kind of disinflationary environment just getting compounded here. But it was when we got to the retail sales numbers, when we started to thumb through, this seemed to spook the market all of a sudden. And this is the thing about trading, isn't it? Is that numbers come out and you think that you're on a particular trajectory because you're looking at a specific number, i.e. inflationary or labor market numbers, which have been to this point suggesting that we should be buying the Nasdaq, buying risk assets, because the dollar is much more likely to pause. If the Fed are much more likely to pause the interest rate hikes than continue to go with them. So we see the inflation numbers come out weaker than expected. That seemed to be a green light to go on the Nasdaq. But then all of a sudden, investors and traders decided to start focusing on the retail sales numbers that came in much weaker than expected, and weaker than last month. And if we start looking at the retail sales numbers, we see a very slight trend to the downside. You know, a couple in a row that do suggest that we're getting some weaker economic development in the United States.
Did you? Big question there, mate. Sorry, mate, to interrupt. Did you buy those shorts? I can see you in that. I can see you in those shorts.
Where are you looking? Sorry.
It was an ad on your screen, mate. It's okay. I'm taking the peek.
Okay. Well, let's have a look at the shorts in one moment, because I also want to focus on the GDP figures from China, because the GDP quarter on quarter from China 0%. I mean, yes, it was a beat of expectation, but this is continuing to show the contraction, and I think that this has been the interesting dynamic, is that we're getting this economic contraction while we're getting central banks raising interest rates. And yet risk assets have been going higher. So economic contraction is suggesting that we are going to get that recession that everybody called for. And the Fed continuing to put the squeeze on the markets would suggest that the recession is going to get compounded, because then they're not going to give any kind of relief to the market. I mean, it's possible that some of the move yesterday was also down to the market eventually sitting up and taking note of some of what the Federal Reserve have been saying all along. You know, every single member is saying it's too early to switch right now. We're not going to do a switcheroo just yet. We had Bostic out also. When was that? That was on Wednesday, I thought. Bostic was out Wednesday. Now he's a non-voting member. But you know, he said something similar, that we're getting close to that rate where we're not going to go any higher, but reducing the rate just isn't likely. Remember, George was out as well, Harker. So we've had quite a few Fed speakers effectively singing from the same hymn sheet that we've heard them speak. So maybe all of a sudden the market paid up and decided to pay attention. But it was a big move to the downside. Now that brings us to ideas. You know, where are the trade ideas? And some of them I caught, and some of them I'm still kind of waiting on. So this is the euro pound, which we'll come back to. But let's have a look at the FTSE to start with. I have got an order in on the FTSE at this daily pivot. I might have to just lower it down a little bit to this point here, which I probably will do. Now, the reason that I've got it here rather than down here, the weekly pivot is an obvious kind of level of resistance that the market is currently reacting to. But I wouldn't mind it just pushing a little bit higher. And the reason really for that is that if you look at the market structure, the structure is quite high. If you look at the hourly, there's this point here. We're looking at one number which the market has decided to take on board and has got a bit spooked by. I don't think that it would be that regular for it to just to sell off and sell off and sell off without some kind of retracement, without some kind of confidence that that we've just got a better price to buy in at from some of the bulls. So I'm just looking for the bulls just to push it up to around about this point here. And as I say, I might lower it down a few pips, but it's around about 20 pips above where the current price is, if anybody wants to have a look at that. And you know, you look at the 4 hour, same thing. Here's the kind of structural low that we saw from the last, you know, what would be the swing. So now what I'm obviously trying to do is pick out where the next swing high is, and I think it's this zone. And if I go down here, that zone becomes quite wide, and I don't think we've got that much to aim for. But when we look down here, we've got this area is an obvious target, you know, that we're looking for. So if I start to broaden this band out too much, then you know you're kind of looking at what, 8's up, just about a 2-to-1, which isn't bad by any stretch. but if I can get a little bit, if I can squeeze a little bit more out of it, then I will do. So that's the current area that I'm looking to go short on the FTSE 100. Now, other notable things that I think are now of interest: copper, massively interesting now, because copper's seen this huge run to the upside, and we are potentially seeing a possible turnaround. Now, this is a weekly bar, so that's incomplete. But let's have a look at it on the dailies. Look at that. I mean, if anybody trades purely on price action bars, and you need to know where to trade these kind of bars from, we're right on top of it. You know, the reason I brought the weekly up is really to find where the resistance point was. There's resistance here, which we're actually slightly above. Bit scruffy, so there could be resistance here. You know, I'm just picking out the closing lines here. So we're in the zone where resistance could happen. We get this huge bar from yesterday, which would suggest that we do have a potential opportunity. And now we're just looking for possible pullbacks. Now, the pullback's most likely area is to test the low of this bar. That's what I'd be looking for. So testing the low of that bar is not too far away from where we are really right now. And if you look along there, this would maybe start to carve out a possible right shoulder. This becoming the left shoulder and the head here. So if we draw this in, this here, there's the head, which would make this area the right shoulder, and this would mean that this is on top of the right shoulder. So it becomes really interesting, I think, copper as a potential move lower, and it's got some room as well. And if we've got economic contraction, copper's really the perfect product to express it in, because of the lack of construction and building. Industrial numbers from the United States have been weaker. Industrial numbers from China have been weaker. So copper to me looks like a potential short at this area, mate. It's counter trend trading, as I say. This is where it becomes a little bit more difficult. But if you look at the potential move to the downside with copper, there's a lot of room before it comes and tests this area again. And if you can pick it up in this area, somewhere in this area, you've got to run about, you're looking at about $1.50, I think, to the upside, and around about 2.5 to the downside. So it's not even a 2-to-1. So you've got to make sure you try and get them, on top of the right price. But it's still a potential better than 1-to-1 trade to the downside. So copper's of interest to me at this particular stage. And of course,
is beautiful.
You like that, don't you? These here.
Look at that. 3 amigos.
Yeah.
Bang, bang, bang. See you later.
Yeah. So copper. Now there's also a trend line along here as well.
And now they're back there. Yep.
There's a possible trend line somewhere in here, looks like to me. And again, it's sort of testing off that level. So it'd be interesting to see whether this actually worked out as a pattern. It's not great. It's not very clean, but let's just see what the measured move on this one would have been. Yeah, I mean, it's played out to the cent pretty much. So it's done the measured move on this particular pattern after breakout, and this does sort of like add a little bit more complexity. NASDAQ, interesting as well, because the NASDAQ, a little bit different to the FTSE, and this is where the potential hedge trade could come in, because the NASDAQ really, if you look at the NASDAQ on the dailies, hasn't quite got down to this level yet, but we're in a buy zone really with the NASDAQ. It does kind of, it is showing something different to the FTSE. This bar does not suggest that we should be buying today. So it does suggest that we could maybe see a little bit more of a push back to this area. Then actually we can see whether there's some upside for the NASDAQ. So NASDAQ is of interest as a possible buy. FTSE for me is a potential.
Sorry, mate. Just again, one of the points I was making earlier was that those moves yesterday were decisive and quite big, or quite large, if you like. Try and find the best word for them. Doesn't matter. This is big. Yeah, big's good. But they went to support or resistance.
Yes, yeah.
And that's, to me, that's the interesting part. Yeah. Because when I see that happen, I think, well, okay, the next day or the next session is going to be not necessarily a reversal of that, but certainly a pullback on that, especially if it's at a support or resistance level.
Yeah.
So whether it continues or not, I'm suggesting that maybe there's going to be a pause, at least in the momentum brought about by that news event, or there's going to be a retracement on that news event.
Yeah, and you know, if you look at the data today, there's not a whole bunch that would continue to drive the market lower anyway. So I make you right on that. I think a pause is probable, and you know, another move down, but a huge move really, actually, from high to low of the Nasdaq. We're talking about a 2% move on the Nasdaq and some. So you know, that happened over a short period of time. There's probably about another 1-ish% to the downside before I'd be really, really interested. So I'd love it at this monthly pivot. The monthly pivot is such an obvious place to try and buy this up, because yes, you've got this little area here, which is you know, I could understand that, but this is the previous breakout area, the previous breakout close, and even if you take in the highs, it does push us down to at or near the monthly pivot. So monthly pivot for me with the Nasdaq is the buy zone. I'm not saying buy it there. I'm just saying that's the buy zone, and at that point, I'll be really interested to pick this one up long. So Nasdaq is different to the FTSE, and actually, because of the situation, it could well be that that economic contraction could push the FTSE lower because of the mining stocks and the energy stocks that are involved in the FTSE, and actually push the Nasdaq higher, because there might then be another point of pressure for the Fed. Now, if you consider the Fed versus the Bank of England, what's happened to the pound over the last few days has also been pretty interesting. And I'm in a long trade with the pound, which I'll show you in a minute. But look at the pound versus the Aussie.
You've been bagging the crap out of the pound. What are you doing long?
Well, I'll tell you what I'm doing long in one moment. The pound versus the CAD, bang. Pound versus the yen, struggling because the yen is another really interesting currency, which we also need to discuss, because that's a potential opportunities there. Pound versus the Kiwi, boom. Pound versus the Sing, boom. Now, pound versus all these, really, really good trades. So, really, mate, apart from if you're not in the yen, actually pound dollar as well. Pound dollar's maybe struggling a little bit more today, but it did actually sort of like take off. So, really, if you're in the pound, you're in pretty good shape, right?
Yeah, it certainly looks like it's got a rocket up its Khyber Pass.
It does,
no doubt about
but
that.
look which one I picked. Hasn't gone anywhere. Now, I just want to qualify that I did actually get into this bar, and I did take profit on this one up here, but it's not very big, you know, when you consider what's going on. The one thing I really like about this trade is that I'm getting some positive swaps. It's quite lovely, actually. So I've got some money coming in just because I'm holding the position. So I'm quite happy to hold on to it and see what happens. But you know, this bar's a great bar. Really, really good. The fact we haven't got any follow through is a bit of a concern, but it's a great bar, and we are sort of starting to see that there's some potential upside for the pound, and that there's a target up here along this trend line, which would give a you know, it's closing in on a 3-to-1, 2.5-to-1 if it takes off there. So I like the pound. I've chosen it against the wrong thing, and you know, and we'll talk about why I chose that. In fact, the reason I chose the Swissy over the Aussie and the CAD was, firstly, the Swissy had no data, so I thought, okay, nice neutral currency to trade it against. And secondly, it's getting absolutely hammered on the COT report. So so the Swissy seemed to me like a relatively good a good decision to me. Now you ask, why would I be in the pound? And the reason that I'd be in the pound is because when we saw the data unfold for the pound on Monday, I think it was. Let me just see.
By the way, guys, gold has triggered, and it's time to cancel the short if you haven't already done so, if you are trading.
Oh yeah, I won't mind having a look at gold as well in a minute. Wednesday, was it? Yeah, this is it here. So this was on Tuesday. Average earnings plus bonus was up 6.4%. The employment change up, claimant count up, unemployment rate stays the same. So what the employment situation does is put pressure on the BOE. But this is the most significant. Average earnings creeping up. That's inflationary. So we had not only inflationary numbers from the pound, but they were compounded and compounded and compounded. Now I think on Monday, was it Monday? Maybe it wasn't Monday. Maybe it was on Wednesday instead. Oh no, here we go. So this was Wednesday, yeah. So this on Wednesday, 10.5% CPI. Okay, it was in line with expectations and a slight decrease from last month, but it's 10.5%, 12.9% on the core RPI. This is high. Core CPI creeping up. Year on year and month on month creeping up. So we're talking about the core number, which the central banks have kind of stated that's the number they're looking at. So this is why I'm long the pound, mate, because it looks to me like there's further pressure on the United Kingdom, and I don't like the economy at all. But the inflation picture is not going away, and they're going to have to break something down.
And as you say, we spoke about this ages, and I said, I don't know, months ago, as soon as these interest rates start to make an impact, you're going to have people screaming at their employers and their sector. We've got to have wages. Wages have got to rise, right? Yeah. And it just becomes a snowball effect because that just makes it worse.
It does indeed, and we've got lots of striking going on. Yeah, well, but strikes are really sort of prevalent right now in the UK. I don't. It's a very difficult thing, because we got teachers striking around here. And I was talking to my girlfriend last night about it, and she was sort of saying, do you think teachers should be striking? That means that our kids have to come out of school. And I was saying it's a very difficult thing because actually, unfortunately, what the people that strike will end up doing is creating exactly what they're trying to avoid, which is higher prices. Yes, higher wages, but higher prices as well. So it just becomes, as you just said, a snowball effect. Yeah, cool. But the problem then suggests that you should stop people striking, which I'm not really for that either. I think it's a very, very difficult question. I think that the whole thing with striking. I think people that feel the need to strike because they're not getting enough wages is relevant. But as I say, that they are going to end up creating what they're trying to avoid, and being putting further pressure under the country. So it doesn't make economic sense.
I don't think it's unique to you, mate. I really don't. I think this is a worldwide problem. Certainly in developed countries, it's just going to be junk. It's going to be horrible.
It's going to be horrible. So this is what we got, mate. And until this situation turns around, it would suggest to me that the Bank of England probably will have to go again. If you look at the rates here, Bank of England at 350, the Fed at 450. So and the S&P. This is why I'm getting the positive swaps. S&P currently at 1%. So there is probably a little bit more room. Bank of England probably have got at least a 1.5% to go, I would think, and that could happen over the next couple of meetings. S&B may not be quite as aggressive. So, there's a few reasons where, and they certainly, at this stage, they didn't have any data to suggest otherwise. So I thought a nice neutral currency. The pound looks like it's going to need to rally further because this is likely to increase. And yet I chose the wrong one. If you consider
you're not to know that the market's going to go completely risk off in a flash.
No, and that was exactly that. That's exactly it, isn't it? Because the yen and the Swiss are actually doing okay. And if you look at the currency strength, then the pound is up there in the top three, but it's up against the yen and the Swissy. Now on to the yen.
Actually, sorry, before we leave the pound, can we go to cable? And Richard, g'day, Richard. Great to have you on board, mate. Look at the weekly chart to see if there's an inverted head and shoulders sitting there.
Oh gosh, yes there is. And it's in exactly the right place at the lower end of the trend as well. So yeah, absolutely, Richard. There's this is the inverted head and shoulders here. There's the head there, and there's the right shoulder. And look at that bar. We sort of talk about bars, and just talked about the one with copper. that is a great bar. And it's pushed the pound higher. And I guess, weak economic numbers from the United States. Yes, weak from the United Kingdom as well. But the most important numbers, the inflationary numbers from the United States, are actually contracting at a faster rate than they are from the United Kingdom. And if you take those wage numbers into account, actually the United Kingdom's still growing when it comes down to inflation pressures. So it does look like the pound may well take off a bit further against the dollar, and it's probably
so let's play this out, right? So Richard's got a supplementary. Does that support what you're suggesting? And the answer, I'll just answer for you. The answer is yes. But there's a problem now, isn't there? Because to actually trade, if you're not in the trade off that beautiful bar, then you've probably got to wait for the neckline to break and be retested, right?
I would say, I think that's a really good point. If you got an idea to start with for fundamental or technical, then you've got to wait for the correct entry. And depending on what time frame you trade will determine where you can trade this. Now, if we're talking about the weekly, which we just did, then and you could bring this down to the daily, and I quite like it on the daily. It's the weekly bar was lovely, but actually looks a little bit cleaner on the daily. Let me just push this up again, and I'll just oh gosh, no, that's not going to be there in the right place, is it? I'm just going to put this on again. So this is the inverted head and shoulders on the daily. So if you're looking at this on the daily, now the idea really is to obviously pick it up at the lower end of the shoulder. Now this is the bar here, which would have created ultimately would have created the weekly hammer, because you can see that this is the weekly pivot. So these are the 5 bars of the weekly price action: down, down, a little bit up, down, and then this is the bar that ends up creating the hammer. So that was the entry, really, if you could get the pullback onto that one. Now that's gone, you're really probably entering inside the inverted head and shoulders, but it's got to be around about 120, 165 maybe. But you're right, mate. This unless you do wait, you could wait for the break, but you could probably still trade it inside this right shoulder. But you are going to need to see pullbacks to these levels. I would suspect, somewhere around about that weekly or monthly pivot. That would look good. That would look attractive. Of course, if you're going to different time frames, then the picture changes somewhat, and you wouldn't need to go quite as low as that. There's the last one on the 4 hourly that you could try and see if you can get a signal on the hourly, same place actually. So, and you wouldn't go any lower than that. There's no point in trading a 15-minute chart, any 15-minute pattern anywhere here. You'd still want to trade the 15 off this area here. So you're looking at probably a highest level at 127.80, 127.90. And a possible level of 121.85 or 121.85, something like that. And the best level would be the top of this bar, I would have thought, because at least then you're trading the previous signal. You're still trading that previous signal. So there's 3 areas.
You're not trading into resistance without some
exactly
room for profit either.
And that's that's really important to determine, and I suppose that's the key, because if you were looking back to the weekly, if you were looking at this as a target, and you may even say that's the target, or in and around this area is the target here, by the time you've got stops in at this particular point, your risk is you're risking way too much to get that profit on these longer term time frames. The longer term time frames, you really want sort of 2, 3, 4, 5s to 1. Even an even money break is not really great off a longer term time frame. So you've got to get. I mean, let's see what that would be if you had it there. That's 360. That's getting closer to the 2 to 1. If you manage to get to the top of that bar. So even the monthly pivot looks a little bit too. Oh no, sorry, the monthly pivot's okay. Yeah, monthly pivot would be the lowest, in my opinion. I don't think. Of course, if you're trading shorter term timeframes, hourly and 4 hourly, different matter entirely, because you wouldn't be you're not aiming for these. But if you're aiming for the weekly, then I think the monthly pivot is the lowest, the highest possible price you can try and get this, because mate, if you wait for the break and the retest, well, if there was a stop area down here, you could probably do it, but you really are starting to contract your potential profit line. So it becomes a factor, that yes, there's an inverted head and shoulders, but when you take in other things into account, and the potential risk to reward, it may not be there anymore, So, so as you say, mate, you'd really wanted to have been in.
Yeah.
Pound, euro pound, I'm also looking at as a potential short. If you look at this on the dailies, looks like it's broken to the downside of this bar here. So anywhere and we're getting very close to my test area. So on this point here, I'd be interested in this. And the target would probably be to come and test these, this area down here that hasn't been tested. So if you're looking there, that's a 1-to-1. So that's no good. So the entry would have to be more like there. 10s gets you to closer to 2. Well, it's pretty tight actually. It's pretty tight. You could possibly adjust that target, but not by much. And this is the thing with it, isn't it? Is that, just because you've got a potential signal, it doesn't mean that the trade is worth it, because you're just not able to risk to reward it properly. But the way that I would look at this personally is to see whether there was a slightly lower area for a stop off a shorter term time frame. So this area wouldn't be too bad if you got your stops there, because then you do have a decent 4-to-1 on offer. So the euro pound, I'll be interested in, mate. I'm looking at this one as a possible trade for the day as well. And finally, just to sort of cover silver. Silver's broken down.
Did you get in?
No, I didn't get in, mate, because it hasn't yet.
Oh, what a bugger.
Well, yeah, kind of, but it hasn't yet actually satisfied any trade setup. Because if you look at this,
I actually thought you got your price, but obviously not.
No, I
was talking about Aussie yen. Sorry,
yeah,
Aussie yen.
okay. Well, yeah, we'll come to the Aussie yen in a minute.
No.
So silver hasn't satisfied the setup, because look, we got this here, support still. We get that lower high here and down.
Look at that! Wow.
Yeah, well, I mean, so now you've got a situation where's this lower low. Now, what I do like about silver, and where I would quite happily trade silver here, short, is with a gold hedge. I wouldn't mind that at all. So long on gold, short on silver. That wouldn't be a problem for me at all. Now, when you look at this on silver, this has got some room to run. This has got a good $1.50, maybe 180 to come to the downside. So if it's 180 to the downside, at this stage, the stops are up here. You're looking at around about 90 to the upside. So there's a 2-to-1 on offer here. Better area would be this daily pivot, but it does mean getting back inside this pattern. But where I don't mind it, and I would still trade it inside the pattern, is with that gold hedge. So I would hedge on gold, and I'd go long gold and short on silver. This would suggest to me economic contraction as well. So you got silver, you've got copper as the two metals that you could trade to the downside. Oil would be another option as a potential trade to the downside. All oil ended up doing was hitting this area of resistance and popping to the downside. Now, some would argue that this is still worth buying down here, but there's so many things that don't suggest that oil's a good trade to the upside, that I still think that there's some flushing out that needs to be done here. So I'm looking for shorts in oil. And I'll finally do the Aussie yen, because the Aussie yen's an interesting one, because obviously as the currency proxy for the stock market, it did have an absolute nightmare. And this is what happened with the Aussie yen. This was my area
it got your price perfectly.
Yeah, and then it went there. And then it went there, you know. So
That's exactly
Dave,
what had to happen, right?
well, do you know, I mean, this is, and do you know, look at this move here, mate. And this is the interesting thing. Boom to the upside and down again. Now, if you look at the Nasdaq, this is a relatively big bar on the Nasdaq. You know, if you look at it on an hourly instead, this is what happened with the Nasdaq. Bang, it was going up fine, absolutely fine, no problem at all, and then bang, it flushed out. So very, very similar to the Aussie yen. And what I thought was quite interesting about that, well, it was almost like investors were reading the numbers and going, "Oh, PPI is down. That's really good. So let's buy everything." And they go, "Hold on a minute. Look at those retail sales. Sell it, sell it." So I wonder whether there was just this sort of time lag where they were trying to figure out what the data meant, and then they decided on the bearish side. You know, they saw the PPIs weakening, so they were quite happy. But then they decided that it was too spooky, so they kind of cleared out the market and just destroyed everything. The yen is interesting because what happened overnight was the BOJ decided to leave interest rates unchanged. We've got this yield curve control sort of loosening thing going on, which made everybody really confident about the yen all of a sudden. But the Bank of Japan haven't played ball where people thought they may, and yet the yen has still managed to rally. Which suggests to me that there's a matter of time before these yen bulls are going to be correct, because the Bank of Japan will have to follow suit in the end, probably, which is what they're sort of intimating by changing the yield curve control thing. So
Mm-hmm.
so I think that there's some further upside for the yen, but look how difficult it is to get in. I mean, geez, we kind of had this.
Well, I'm in, but like 200 pips later. That's the
Oh,
thing.
well, I think that's okay, mate. Look at this collapse. Boom, collapse. And actually, look where price came as well. Right on top of that original collapse. This was the collapse down. This is the yield curve announcement. That was what happened. That was the yield curve announcement. And then this is retail sales, oddly. You know, so basically all that's happening right now is that the market is basically saying, no, that yield curve announcement is actually major important. So you bulls can try and buy
and
this up
that's
again.
the price. We're not going above that.
Yeah, we're not going above that. So we're staying down here. So the likes of me, I have to wait for a pullback and see if I can get a maybe near the price that I was trying to get anyway. But the yen looks pretty hot right now, mate. So just to summarize, the ideas for me are silver short with a gold long, copper short, oil short, Nasdaq potentially long with a FTSE short, and a FTSE all and out short as well, and obviously pound Swissy I'm going long, and euro pound I'm looking for a short as well. So it's created a lot of ideas, but nothing really setting up as yet.
Yeah, look, I'm very much in the same ballpark, not as far as all of those assets are concerned, but I think tomorrow is really interesting for me, and I've got 4 that are outstanding prospects. I'm not sure how many have been wiped out, but I'll share them with you.
Yeah, let's have a look, mate. CPI overnight as well from Japan, so that could be another interesting dynamic.
Mm-hmm. Okay, they involve the Aussie fairly heavily, but
we haven't got your chart, mate.
Truly? It says I'm sharing.
Oh, it does. Okay, let me just stop my share and see. Oh, maybe I just got frozen up. You still hear me?
Maybe you have.
Oh, yeah, you can still hear
me.
I
can hear
you.
You
know what? You can hear me, and my thing has frozen up. Okay, so if everybody else can see your chart, that's good.
Okay, I'm looking at.
Good.
This is a trade if this happens, basically. And Aussie Swiss is one of them. And on the daily chart, all I need to see is a retest of this level.
My Zoom's collapsed a bit, and I'll be right back in.
Okay, no worries. So, guys, this is pretty clear to me what needs to happen, or it was pretty clear to me at the beginning of the day what needs to happen for me to trade. Aussie Swiss was 1. Now, you've got to put this into context, of course, as always. And what I see dominating this chart is everything bearish. So, and people will argue this with me all day long, and that's fine. I don't care. To me, it started with this bearish engulfing bar. Then you get what I call a double top, right? Most people would say, oh, but hang on a minute, it's not up there. I don't care. That's a top, that's a top, that's a top, right? Why is it a top? Because it's topped out. The market is topped out. Doesn't mean it has to be equal with that for mine. So to me, that's a double top. And to me, that's a double top also. And interestingly, every time you hit that level, you get a game changer bar, game changer bar, game changer bar, game changer bar. And every one of them drives the market down. Game changer bar here, game changer bar there. They're all over the place. So what that means to me is this market is still in bear mode. It's still in a downtrend, if you like. Sweet, can you see my chart? 744. It says I'm screen sharing. So are you saying you can't? Can you now see my chart? Okay, awesome. Must be a lag somewhere. Okay, so my thought process goes, okay, whenever I see the opportunity to go short, I'm going to go short because this is what the market is, or the market structure is telling me to do. So we've gone below this level, which to me is key to this particular circumstance. Weekly chart, not giving me a game changer bar in any way, shape or form, but what it is giving me is that level there. Support, support, resistance. We've now come back underneath that, right? Daily chart is giving me a very clear signal that this is a false break of this level and this level. Same thing. Richard, I needed to manually select the view Jeff screen menu up the top. Can you see my chart, Ash?
Yeah, got it, mate. Got it. Yeah, my Zoom just collapsed.
Cool. So this level's absolutely relevant, if not dominant. So all I needed to see this morning or today was a bull bar coming back here, and it would have been in like flint. Sadly, the market has continued in its vein overnight with risk off. Well, certainly in this case, it's a clear indicator that risk is off because the Aussie's a risk-on currency, Swissies a risk-off currency. What's the net result of that? Downside for Aussie Swissy. However, if I do see a pullback, more than happy to trade it down to this level here, because at the end of the day, it's a range trade. You're trading breakout, false breakout, but you've got to get that retest. Can't jump in now. The second was Aussie Kiwi. Look familiar? Well, the shape looks familiar, but we're in a completely different part of the chart. You'll look at this and say, okay, we've got a potential left shoulder here. Maybe this is the right shoulder. And that's cool, because this is not a matter for me of I'm predicting that this inverted head and shoulders, if it forms, is going to drive the market high. What I'm actually predicting is if it doesn't drive it high, then it's going to go low. And that's kind of where I sit most times. So this bar is shaping up absolutely perfectly for me at the moment. And if it were to come back to this horizontal level, this one here, a bit of a cloud of a price, obviously, and resistance over here, support here. I would love to see this hit this level or even beyond to the trade line. And if I see that, like I said, I'm all over this like a shark on a mackerel, and I'll be trading that short very, very quickly. So that's Aussie Kiwi. We spoke on Monday about the potential for the Aussie to come off. And I think that still remains. Nothing's changed since Monday in that regard. In fact, it's probably got worse. But against the Kiwi, they're kind of both Tom dolls and they're both risk-off currency. So that doesn't really change too much what happened overnight. But this will.
Then stepping down, mate. Did you think that'll make any difference?
Say again, mate.
Arden is stepping down in New Zealand.
Oh yeah, interesting point. Heard that, and I was going to ask you the same question. I've got no effing idea. What I do know is that she's very well respected outside of New Zealand.
Mm.
What I also know is there's a certain person who lives in New Zealand who shall remain nameless, but his initials are Paul Bottrell, tells me that it's a bad thing for New Zealand, the fact that she has been Prime Minister for 7 years or whatever the case, 5 years or whatever it is.
Yeah.
So does that mean the New Zealand economy is going to benefit? I really don't know. I would suspect that that's the case because that certain nameless person whose initials are Paul Bottrell would certainly be erring on the side of best for the economy, one would have thought.
Does it not depend who steps into her shoes?
Well, I guess it does, and I don't think it's going to be Paul Bottrell, but it should be maybe.
But you know, mate, this is the thing. You know, if I think about what happened to the UK during Brexit and everything else, the uncertainty of the Prime Minister really did cause the pound some problems. So if you were to use the same analogy, then you know that there could potentially be some weakness in the Kiwi while they sort out who's going to be next in, you know, because but the market doesn't like uncertainty. Now, not being
no, they don't. That's true.
I'm not clear on the political situation in New Zealand, and I don't know if she's stepping down and handing to a number two, or whether it's going to be an election or what. But I wonder whether if there was an election, whether we could actually see some weakness in the Kiwi. Probably not against the Aussie per se, but I wonder whether the Kiwi might be something that could come up at the top of the list again against the Swissy, the yen, and the United and the pound at this stage.
You got time to text PB, or even Julian? Whilst I'm doing what I'm doing. No, well, by all means, but just an opinion on whether Ardern's resignation or stepping down is going to make a difference to Kiwi. That'd be good.
Yeah. Okay, mate, I'll find out.
We get some live expert opinion.
Why don't we invite him in on Monday and see if he's available Monday, and he can come and maybe
all right,
give us a rundown on that.
All right, we'll do that. Happy days. But like you said, and like I said, I don't think that's going to affect Aussie Kiwi too much. What will affect Aussie Kiwi a fair bit, in my opinion, will actually. Now I think about that, there is the thing with Aussie Kiwi is they're both condols. So it does, in many respects, depend on what happens internally in Australia and or New Zealand at any given time as to which way this pair will move. So, I mean, I think you've raised an extremely valid point with this. So I would like an expert opinion on it.
Yeah, so I've just read a little thing. It says she's told reporters that she's going to step down on the 7th of Feb because she's not got enough in the tank to do the job after 5 years as Prime Minister. And it looks like and it says it would have been a tough election. So it does sound like there's going to be elections in New Zealand this year.
Oh, there are. There's definitely elections.
So if there's elections and she's stepping down, that means her number two is going to be fighting for the party, I would suspect. And that may well be a factor.
Yeah, I like your way of thinking. So here's the thing with this. It's a lovely smiley face. One of two things is going to happen here. Sorry. If we get that bull bar today, one of two things is going to happen. The bulls are going to play out this inverted head and shoulders, and the market will go that way. But my thing is, if that doesn't happen, this will. So that's where I'm at, right? And that's what I want to play, because it's too hard for me to trade long here, because I've got, as I pointed out before, a chart that is extremely dominantly bearish. So I really don't want to play the long. I want to play the short. And for that reason, I'm going to put an entry under there if this bar is bullish and challenges that level or that level there. That's where I'm at with Aussie Kiwi, notwithstanding that there may be an interruption because of the Ardern thing. But yeah, I would like to know. That would be really cool to know.
Yeah.
I can't get rid of my things. There we go. So that was number 2 of 4. Number 3 of 4 is Euro Swissy. And if I can get rid of that pen, that would be good.
Oh yeah, this one I was looking at as well, actually.
It's exactly the same, right? It's 100% exactly. They're all the same. This is like a picture that just keeps unfolding. And this is really doing exactly what I want it to do today. I want this to, if that were to close exactly as it is now, I'm short. And I need to take some profit here. And I hope it is a small candle because it'll get me probably 1-to-1 before I'm even looking like this higher low that ultimately is what I seek. Right? Maybe we've had it. Bullish engulfing, suggesting reversal, higher low. It may already be in place and exactly the same scenario, exactly the same premise. If that's the case, the market's going that way. If it's not the case, then this false break looks really, really cool to me. And it could bring the market down to here, it could bring the market down to here. And that's why I think that's attractive. So not predicting that Euro Swiss is going short, I'm saying if it doesn't go long, then the reverse should happen. And that's exactly what false breaks are all about for me. Last one is pound Aussie. Now, I've taken on board what Ash was saying about the pound. And on Monday, we were talking very much about the Aussie and its potential weakness throughout the next little term. If this were to set up for me, and it doesn't look like it will, frankly, but if it were, it comes back here, and then I can pick it up off this rebound and trade it long, which is my want, right? So there are a few ideas. They're all based on the same thing. They're all based on false breaks. But I think if they set up, they're going to be perfectly, I won't say safe to trade. What I will say, safe to trade, because guess what? That wasn't. But that was news driven. You can't help that. So, and that's why we don't trade our accounts at 5%. That's why we trade them at less than 1%, right? And at the moment, I'm only traded 0.25%. So I get into the swing of the new year. But that's kind of where I'm at. And I think if you do get those pullbacks today, you may well get a good result out of those particular 4. Aussie Swissy, Aussie Kiwi, both short, Euro Swissy, and pound Aussie. Euro Swissy short, pound Aussie long. If you get the opportunity. I'm not saying trade them now. I'm saying wait for those retests or pullbacks, if you like.
Yeah.
One thing I wanted to do, Ash, is you had the NASDAQ up earlier and I saw something that I hadn't seen before.
Okay.
When I say I hadn't seen before, I mean I hadn't seen before today. This really, really does look like a sentiment cycle opportunity to me. Maybe I should go a bit tighter. First one, second one, smashed it down to here, came back and retested it. Wall of worry, maybe not the wall of worry. Maybe this is the wall of worry. But I'm looking for the aversion point here. Monthly pivot could give it to us. You've got a triple bottom, even forget the sentiment cycle. You've got a triple bottom sitting here, or a quadruple bottom even sitting here. A higher low here makes perfect sense to trade this long to me.
Yeah.
I think you were saying the same thing.
Yeah,
but not with that in mind, right?
No, not with that in mind at all. Now you say it, I do think that's interesting. I mean, the big red flag for me with the Nasdaq is that it hasn't reached the level, the pre-COVID level, and that was the area that I would have been really interested in looking for signals in the Nasdaq to turn back to the upside, and of course, regardless of the situation with the charts and looking at particular technical patterns, we're not through the problems as yet. When we think about what created the upside with the Nasdaq, it was just it was liquidity everywhere. It was incredibly confident. It was an incredibly confident market, even with all these overvaluations. Now it's flipped to the downside because of tightening. And we're not through the tightening cycle. So I'm not really, I haven't really got a fundamental reason to kind of go into the Nasdaq and say we should be long. When you think about the bear side is gets a bit trickier because we're not at the COVID levels, which suggests that there could be some further downside, but we have come down a long way. I think it's near 30% to the downside with the Nasdaq, and most bear markets are around about that. So yeah, what does that do? 61% retracement, is that? Yeah. So there's probably enough to suggest that there's some technical reasons here, but that spike just before that 61% area, 61% retracement area, that's the COVID high, pre-COVID high, I should say, and that was really what I was after with the Nasdaq before getting too confident with it. But there's certainly a case to be made, I suppose, for some upside here. But the sentiment cycle would suggest that when we get that turnaround, it's we're back to the upside and we're going bullish again. So that would be my one red flag with looking at the sentiment cycle at this stage and thinking that maybe we have hit that wall of worry. I wonder whether the wall of worry hasn't yet been hit.
The interesting part for me is going to be what happens next. The wall, the sentiment cycle and the inversion point are generally a big launch pad for next level resistance, if you like. Not this resistance, but this resistance. So it really is a launch pad, or supposed to be a launch pad. The problem I've got with that, if that actually occurs, that 1366 level means that the trend is broken. If it closes, if it closes up there, the trend's gone. So that's a reasonable concern for me. The one thing I would say about that also is that looks very much capable of going into range here as well.
Yes, it does. Yeah, it does.
We might be stuck there for a while.
Yeah, and I have to say the price point that I'd be looking at for the long would be up against that trend line, and I wouldn't be looking for any more than that. Yeah,
that's the sticky point for me as well. I mean, I can see the potential for the long, and like I said, the sentiment cycle suggests we go to here, and I can't see that.
Yeah. Well, that's good, mate. So we are at the top of the hour. I guess it's worth throwing it to the room and seeing if anybody's got any ideas or suggestions or anything to add to anything that we've been discussing. You guys are more than welcome to come on camera or mic if you don't want to come on camera, or both, or put it in the chat box. I've got nothing in my chat box, so you may well have yours, but
yeah, they're going directly to me. But
they're going directly to you. Okay.
Everything.
All right, no problem. All right. Okay. Well, if nobody's got anything else, then we will wrap it up. We will be in on Monday.
We will, despite the fact that it is Chinese New Year and a public holiday, and we wish all of those celebrating that have a wonderful, wonderful time. But we will be here, and if you've got nothing better to do on a public holiday, come and have a chat to us.
Yeah, and we'll see if we can get Paul in and have a chat about the Ardennes situation.
Yes. Yeah, indeed. And I've got a funny feeling that George might even wake up and say, oh, shivers, I should have been in there on Monday last week and the week before.
Yeah.
We might even see George. We'll see.
Yeah, that'd be amazing.
I wonder how Simon's going. We might even have a chat to Simon at some stage to see how he's going.
Well, that'd be yeah. Well, crypto markets actually,
it's
sprung into life as well.
Get interesting.
Well, they are, mate, and I think that's probably the best way to put it, because again, is this a bear trap? This is what we're seeing with the Nasdaq, and what you're looking at with the Nasdaq. Is this actually just a bear trap? We're starting to see the sentiment start to move back higher. But what is that move off the back of? That moves off the back of speculation that the central bank is going to be pausing soon. What does that even mean? And they're saying they're not going to do that. We got recession concerns. We've got data which is suggesting that we're getting global contraction. Doesn't seem to me like we are in a situation or an environment that we should be buying anything risky. So this does smack of a bit of a bear trap, and I wonder whether it might well be the same for the crypto market, where one more dip is what we really need before we start going up again. Genuinely, that as you've just put it about the wall of worry. I wonder whether we might need to see that one more dip. And as I say, mate, we get down to those
really get depressed. Yes.
Yeah, exactly. I mean, for the Fed to pivot, I think it's going to need a lot more negativity in the data. And a couple of numbers here, there, and everywhere. Without the labor market shrinking, big problem. I don't think they're going to be doing anything particularly dovish. So I think we've got a period ahead of us, and you may well be right. Maybe this is just a range. Maybe we stay in the range and we don't actually break down. But if we do, pre-COVID highs, I'll be all over that, and I don't even think that I would bother with stops at that point. I would just whack in just the tiniest amount. And see if I can actually pick something up there, and just not only not use leverage, but just probably just half it, or even put a quarter of it on, just to see if there's an area that where things could start boosting up again, because that price point would be really interesting if we can get down there.
That plays into this thing that we spoke about before. It's always, I'd love to see that retrace back to here. This is the dollar index, by the way.
Yeah.
I think an entry there and a stop loss up here somewhere.
Yeah.
Gets me into a maybe 5-year trade or something like that.
Yeah, well, that's the thing, isn't it? That's what you'd be looking at.
I hope the swaps are positive, because I'm thinking beyond here. Otherwise, I wouldn't be able to afford to stay in it. But I really, truly think that, in 5 years' time, the US dollar is nowhere near here. It's down here somewhere.
Yeah, I think you're right, mate. Well, if you're selling the dollar, you're not going to get positive swaps, because it's one of the biggest payers for interest right now.
Yeah, but we might get a switcheroo during half time.
We could get a switcheroo. Yeah, fair.
Who knows?
Happy New Year to you too, Paul. Thank you so much for being part of the show, as always, and to everybody else in the room as well. Thank you. Have a great weekend. We probably won't see many of you on Monday, and we completely understand. Jeff and I will be waxing lyrical anyway, and we'll see if we can get some other guys into it to have a chat with, just to kind of pass the time. I was going to check the economic data for Monday, but I think I've just lost my window. There we go. It's back again. Here we go. So next week, on the Monday, we've got holidays in China. We've got US leading into nothing. Monday's going to be dead, mate. And nobody's going to be here. It's going to be you and I. But
Okay.
That's okay. We don't mind that, right?
Absolutely. We'll have an education show.
Yeah.
It'll be nothing to do with trading. We'll be talking about beach holidays and stuff like that.
Yeah, we could do that. I don't know. Is it going to be worth getting? Yeah, actually,
it's a good point. Even if Simon can't come in, and even if George can't come in, maybe we can have a chat to them off air between you and I, and get their thoughts on what's coming up. Maybe that's a good opportunity to talk about what Simon thinks about the crypto world in the next 12 months. And go from there. And of course, as we've discussed already, gold's coming off. We're going to have to go through a little bit of drawdown, looks like, before we get our trade up and running, if that is to be the case. All right, buddy.
All right, nice one. Have a great weekend, guys. And you too, mate. Have a good weekend.
You too, mate. Thank you for being my trading buddy, and you guys, thank you for being our trading buddies. Have a wonderful weekend. If you can't be with us on Chinese New Year Monday, then hope you enjoy it. Have a wonderful weekend. Bye-bye. for now. See ya.